The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Good morning, good morning. In the United States, it is still morning today. Out here, only 9 a.m. in the Mountain Time Zone. Speaking to you bright and early out here. Now, I put a chart up there of the IWM. That's normally how I like to start out the shows here, since it is the Small Cap Show. Why not start out with the Russell 2000? Take a look at that. Now, you're seeing that it's holding nicely above its 50-day moving average, but it's actually kind of hovering right around, a little bit below that 5-day exponential line. That's not a good sign. And I know I've been a little more cautious than many, many traders who have been out there, even after that very encouraging follow-through that we had back on, I believe it was June 29th. So that looked pretty good. We did have some nice upside action in the market for the few sessions following that. And as many of you know, if you listen to the show, you know I'm not into making a lot of predictions, but I am very much a proponent of letting the market prove itself, and it appeared that it was about to do that. But of course, as we all well knew, there were still many potential developments out there, and even without big news, you could still have the potential for just market sentiment in general to sour. So I was waiting to see what happened last week, if the market rally did indeed really follow through on the follow-through, if that makes any sense. And we had a holiday week with some low volumes, so I don't really necessarily trust all the action you see then. And then, of course, we kind of get back to work this week. Even though it is summer, you still do have more traders back on the floor, back in the offices after that holiday week. And we're seeing some selling as we return from that. So this is what we're dealing with right now. I'm still in cautious mode. And frankly, I'm pretty glad I did not go into a lot more positions at this point, because I know I don't like that idea of having to be monitoring them and watching, oh my goodness, did we undercut a stop loss, which of course that's part of it. I'm not suggesting that it's some kind of big emotional component, because it really shouldn't be. It should just be undercuts that stop loss, out you go. Because you can't predict what's going to happen next. A lot of times you will see a stock, particularly these smaller cap names that we're dealing with, you will see them undercut a stop loss, and it will rally back after that, sometimes even temporarily. Let me show you a good example of this one right here. I want to show you a stock that I did have, and those of you who are subscribers to the Low Price Leaders newsletter, you know we cut our losses on this one, got out of this very quickly. This is Triple D, and as I'm kind of fond of joking around with, not Guy Fieri's diners, drive-ins, and dives. This is 3D Systems. It's a very interesting company. They make some of that $6 million man stuff, some of this RoboCop stuff, the very, very high-tech prosthetics. Very interesting stuff, really changing people's lives with some of their products. So that is an interesting thing. But you got to separate that from what is going on with the stock. This is one that I did take a position in a while ago, a couple weeks ago. It did undercut the stop loss. it rallied back above that temporarily, actually. But now take a look at where it is. It's falling. It's actually, as of today, it's down about 3.7% today. We are seeing it just about near its 15-day exponential moving average. So could this turn out to be some kind of constructive pullback? It possibly could, sure. Not prepared to write off this stock. We're looking at some very good estimates for the next couple of years. Let's see. Wall Street expects earnings per share of $1.14 this year. That would be a 58% year-over-year increase. $1.41 a share in 2013, another 24%. This company just, actually, what am I talking about? I'm talking about the wrong company. This is the printing, this is the printing company, but they are involved. No, I take that back. This is the right company. They are involved with the prosthetics, but they also are involved with the automotive industry, doing a lot of cool stuff in that business. And they just made the acquisition in the prosthetics industry is what they're moving more heavily into. They had been more into automotive. They were moving into the consumer business. So really from a business perspective, just a whole lot of good potential in this particular company. Market cap of almost $2 billion, so it does fit into the bailiwick we look at here of small cap stocks, market cap under $2 billion. Not bad liquidity on this, moves 1 million shares a day, so that's pretty good. But nonetheless, right now it is remaining somewhat of a risky buy. Now this is one, historically, I should say, historically it has a bit of a tendency to rally to a new high and then pull back. So I know there are many, many stocks that you can watch these base patterns that they form. And when they do hit a new high, it could be a buy opportunity. But a lot of stocks, though, if you do go back and look at their charts, you realize that a new high tends to be some topping action. And it's actually more constructive to be taking a look at some of the key moving averages in some of these. The 5-day exponential moving average is a good one that a lot of successful traders use. It's one that I've been relying upon quite a bit in the past couple of years. So this right now, pull back to the 15-day, that could be constructive. Could be one to continue keeping an eye on, but this is just an example of one of these I wanted to show you that is an example of a stock that undercut that stop loss, did rally a bit after that, but is falling once again. So we're still having a lot of this untrustworthy, I don't want to say volatile, because that's not really the right word, but unreliable action in some of these, many of these stocks. There's just a factor of you can't necessarily get on board with any rally at this particular point, and that's why I've been much more cautious. Why I held back last week, why I'm holding back this week so far, though I am going to do a review of the watch list this afternoon, and it's possible we might have some updates to that later on today, although if the market itself does not show some kind of later session rebound, that would not be a particularly encouraging sign. As a friend of mine calls it, very facetiously, the market miracle that you have often seen coming in the later part of the session. Not unusual to see that. So we'll see if we get another look at that today. So wanted to take a look today. Let's take a look at some of the stocks that are out there moving, maybe some of the smaller names, some of the names you don't necessarily hear about. And just as a reminder to everybody, or if you're new to the show, just to introduce you to what we do here on the Small Cap Roundup, as the name suggests. We do round up those smaller caps, stocks with a market cap between $300 million and $2 billion. Not looking at penny stocks. I don't want to look at stocks that don't have some measure of liquidity. I really prefer something with a liquidity of about 300,000 shares per day on average or greater. And as we just saw with DDD, you do see that some of these names do have pretty good liquidity, and that's something I want to see, because with something that's very, very thin, like the one I just put up on Tiger TV there, Young Innovations, YDNT, this is a dentistry supply company. Now this one only moves 27,000 shares a day on average, market cap of $282 million. This is really not something that would show up on my screens. I just don't like the thin trade in this particular stock. Just can make a stock like this very difficult to hold. So I'm just taking a look at this one here. Now this one, as of this morning, it is making a nice price move, about 0.8%. You're seeing heavier volume than yesterday. Now what happened here, this is bouncing back after an analyst downgrade. So you are seeing it rally to some intermediate highs right there. This is one that's moving today, but I got to tell you, this is just not the kind of small cap name that I'm going to get particularly excited about. We're not seeing any kind of real explosive revenue or earnings growth on this one. That thin trade just makes it a tough one, because it's not only is it not a favorite among the institutions, but there just aren't too many of these micro-cap funds out there. Now, it's always good to see if you do have some of these micro-cap, some of the better-performing micro-cap funds, and there certainly are some. Wasatch, under the leadership of Robert Gardner, ran a top-performing micro-cap fund for many years, and they still do run that fund now with some new managers after Robert Gardner has moved on to Grandeur Peak. And there is some institutional ownership from some of these. I'd like to get some of these microcap managers on the show. I think they would be very interesting to talk to. But this is just, the thin trade on this one makes it particularly risky for an individual. Don't forget, the fund managers will often hold through a correction, much more so than we as individual investors have any need to do, because they are doing quite a bit of that fundamental analysis, looking at the PEs, looking at the cash flow. They'll sit down and they'll talk to the managers, and you could argue about, well, how can a fund manager make a solid investment decision sitting down with a guy in his office and going on some kind of intuition on whether or not the guy is trustworthy. I do believe in those kind of intuitions about whether or not somebody is a trustworthy person, but not everybody's intuition is tuned into this kind of thing. So they can't make that judgment. I think it's a specious argument, is what I'm trying to say here, is that all of this so-called research necessarily yields the best names. We're going to come back here. We're going to come back after the break, take a look at some more of the movers today. Give me a call, 877-927-6648. I'm Kate Stalter. This is the Small Cap Roundup. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back to this segment of the Small Cap Roundup. I'm your host, Kate Stalter. You know, in the first segment there, I was talking a little bit about what we cover in the newsletter, Low Price Leaders, which are the small cap stocks with a market cap between $300 million and $2 billion. But as the name suggests, it also covers low price stocks. Now, as I always say here, I have to give this caveat. I do not mean penny stocks. It's kind of funny. People often, even when you say small caps, people hear penny stocks. And it's kind of funny because I've had to explain to several people what I'm doing here, and they say, "Oh, I don't trade small caps. I don't trade small caps." And I'm like, "Okay, well, that's your choice. That's fine." And then they say, "Well, you know, they're just those pennies. They're so volatile." I'm like, "I'm not talking about penny stocks. I'm talking about small caps." And then it's a whole different thing because, as we know, there are a number of fairly well-known names. I want to talk about one in a little while here that are small caps. It's just interesting that that's often what people hear. I've run into that a few times. It's kind of funny. So when I say low priced, I also don't mean penny stocks. I mean stocks trading between $5 and $12. As we know, as I've cautioned up front, this can be a fairly risky area here. You have to be careful. You have to use some caution. And I think that's just pretty thoroughly ingrained in me. I would really rather be investing in a healthy bull market. And who knows, we may still have one, although we've going through a little bout of selling right here. And here's what's kind of weird about the current market conditions. So we had that day of heavy volume buying on Friday, June 29th, which was right before we had this kind of strange broken up holiday week here in the U.S., of course. And then with Tuesday being a half session, an abbreviated session, of course the market's closed for July 4th. And then you kind of get back into some of this. You have some lower volume, really what I consider unreliable trade the holiday week. Then you get back on Monday, and what do you see? Some selling. So there's I believe, without imposing a lot of opinions, just by watching what's going on, there's one of those, remember that old song, things that make you go, So it's kind of one of those, things that make you go, So I put up a chart of a stock, a weekly chart of something called Tesoro Logistics, TLLP. This is a stock that's moving today. This is it's an oil and gas. This is one of these limited partnerships. So it's got a very good dividend yield, 4.3%. Went public very recently, so it's, as many of you know, and as you may hear in the commercial there that runs for the Low Price Leaders newsletter, one of the areas I like are recent IPOs, because those are frequently a very fertile ground for some of these smaller stocks that are young, have energetic management, have not necessarily saturated their market, so there's plenty of room to grow. And a lot of these pipeline plays have been in recent months, although you do see that on a weekly basis, this has suffered quite a bit lately here. But as many of the analysts and fund managers I talk to, as they are fond of saying regarding these pipeline plays, these are the toll roads. And I'm just going to repeat what they all say to me. And, it makes sense, but nonetheless, you do see this thing having sold off in recent weeks. But what a lot of fund managers like about this particular subsector of energy is that the pipelines are the toll roads. So regardless of the prices of the underlying commodities, these are still going to be used. Now, I guess you could make an argument, I suppose, that if supply and demand changed, you might see some reduced usage of some of these, some reduced tolls paid, but you might have to see quite significant decline in usage for that to occur. So nonetheless, you did see a sell-off here. You do see it rallying back right now. And it could be interesting. As I mentioned, despite that sell-off, a lot of people do remain big fans of these. Now, this is very small. It's got a market cap of $538 million. And again, this is one of these very thinly traded names, which is why it's not going to show up on some of the screens that I'm showing to the subscribers there on Low Price Leaders. Only 57,000 shares a day traded on average does make this one pretty risky. So, there's our next break. We're coming up to that. We will have the European close, always eagerly anticipated. After this next break, we can just look at that for a moment. Give me a call, 877-927-6648. I'm Kate Stalter. We'll be right back with the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we're back. Well, we've got the Dow back in positive territory. Okay, but NASDAQ, S&P 500 still on the downside there. And frankly, those are the ones that I, probably like many of you, I tend to follow those more closely for all the obvious reasons. So let's see here. I put a chart of a stock that had been moving higher earlier this morning, a small cap, but it looks like it may have actually lost some of the earlier gains. And no, it's looks like it's just trading slightly to the upside right now on one of my other screens over here. This is PRFT, Perficient. And this is, that name, I've always thought that name was funny. It sounds like somebody is bungling the word proficient. Perficient. It just sounds like, I don't know, somebody from Deliverance or something who's not really able to say the word right. Sorry. Okay. So this is a technology consulting, infotech technology consulting company for corporate clients, of course. Now, this has had a pretty good track record of revenue-driven earnings growth. But you know something? This is not really a stock that has had much success at being a price leader, despite some good fundamental indicators recently. Kind of interesting. It's got a pretty high beta, 1.6. So that indicates some of this volatility relative to the benchmark index. Small company, market cap 354 million, moves 144,000 shares a day. You know, once again, kind of showing you some names today that wouldn't necessarily pop up on the screens that I like to use specifically for the newsletter. Once in a while, I'll make an exception if there is something that has been an extremely strong gainer previously, and the poster child that I like to show you guys all the time, and this is a watch list name. I'm going to pull it up for you right here. I've talked about this a lot. This is Anika Therapeutics. They make bone and cartilage treatments. Now, this is one of these smaller names, but this has something going on for it that a lot of these other smaller names do not. It has a very strong previous run-up right here in the latter part of 2011 into the early part of this year, actually right up through right up through May of this year. So this consolidation, not bad and not surprising after that. And this one only trades, this is a very small stock. Market cap 196 million. So it really doesn't fit all my criteria. But as we know, there are sometimes some special situations. I talk frequently about some of the biotechs. I might also treat those as special situations. This is a biotech, of course. It kind of falls into that broad category. But this one does have, because it's more in, it has products that it's monetized already. So it does have some of that good revenue and earnings growth. And like most of these biotechs, this could be some kind of acquisition target at some point. But as I've stated repeatedly, I don't use speculation about a possible acquisition as any kind of decision when I'm looking at buying a stock or selling a stock for that matter. But I think it really falls into question more when you're looking at the buying side of things. Okay, so I just wanted to show you that as an example of one of these smaller names. Let me take a look at some other smaller stocks that are moving today. Kind of a couple interesting names among these. So this is Beacon Roofing. BECN is the ticker. And this actually is a retailer, but it is one of these housing related type of names that are showing some gains in the past few months. I'm going to talk about a couple other of those in a minute. As I've said frequently, I don't think I mentioned it yet today, but we do have a trade on in the Low Price Leaders newsletter. It is a housing related name. It's performed well. We've talked about it here on the show quite a bit, and I'm going to show you some other housing related names. We'll take a look at a few of those right now. That's been an interesting and constructive subsector area to invest in recently. When I was sitting in on Tom's show recently, and welcome back, Tom, by the way. Great to hear him back on the air today. But when I was sitting in for him last week, and we had my friend Ken Hoover from IBD as the guest, he did talk about some housing names, and one of the topics that Ken and I were discussing is this is an area that you do have to fight. I do anyway, fight keeping your opinion out of these things, because we might just all feel so overwhelmed with bad economic news on the employment front, so on and so forth, that you might just feel like, well, heck fire, how in the world is the housing market showing any kind of improvement right now? Just watch what the charts are doing. And if you follow some buy and sell rules using the technicals, you can get in and out of there at the right time. So Beacon Roofing, as the name suggests, roofing supplies, related materials. They operate stores across the country. This is a fairly recent IPO. I remember when this went public, it was maybe 2004, a little earlier than I thought, but 2004. So this still falls into the category of a newly public name, showing some nice action today. Market cap of $1.3 billion. trades about 477,000 shares a day. Now, there's one thing I'm kind of a little wary about, but it falls under the category of the analyst outlook, not necessarily what's happening at this moment. Analysts expect earnings per share of $1.63 this year. That would be a 40%, 41% year-over-year gain from 2011. Now, that earnings growth is expected to decline pretty sharply in 2013 to $1.78 a share. That would be 9% growth. Now, you just look at these things, and what are these based on? I mean, we can kind of conjecture it right here. Maybe somebody's forecasts that have not been updated, or maybe they have, about what's going on in the housing market. I mean, let's face it. There are so many unknowns between now and 2013. It's almost a little crazy to be relying completely in every case, of course, on some of these estimates, whether they're too optimistic or too pessimistic. You know, we've got the situation going on with, obviously, the U.S. election, and depending what happens, that could change business and consumer sentiment, depending on what we see with results there. Not only sentiment, but actually some decisions that businesses do choose to make, although once again, you'll hear a lot of debate on that topic. So that's just one thing. I'm not getting political here. I'm just tossing that out there, as that's one big factor that's looming that you have to kind of wonder, are the estimates necessarily your best guide? Personally, I don't think so. You've also got the continuing, unraveling, re-raveling, whatever you want to call it, of what's going on in Europe. So that's a big question mark that remains out there. And I'm going to say right off the bat, is a Peabody, Massachusetts roofing supply store something that has that the European situation has any relevance on? Probably not a whole lot, because this store is operating in the United States. But again, it comes back to the sentiment, and you do see many of these situations recently where just everything gets sold off or everything gets bought, just regardless of what the item is in the news there. So Beacon Roofing Supply is an interesting name. It's one that I might begin tracking on my watch list. I've kind of been looking at this a little bit in the past week or so, and who knows, you might see an update pertaining to this one in the Low Price Leaders newsletter. Let me show you another one I've talked about frequently on here, and this is Thurman Group Holdings, THR. I mention this one a lot, and I kind of joke about this one sometimes because this has been a very solid technical and fundamental performer, but you're not ever going to hear about it for a whole slew of reasons. First of all, one reason is it's got a market cap of $709 million, trading only 134,000 shares a day on average. So you're not seeing a whole lot of opportunity for the investment banks to be getting out here and promoting this stock. I mean, let's call it what it is. Not a big factor when it comes to the institutional sales. You're also not going to see a whole lot of funds that are going to be getting involved with a stock like this one. So that's also going to be a factor in kind of keeping the attention on this particular one muted. Now, couple things just to be aware of that I like about it. Not any kind of recommendation, just kind of giving you sort of the what's what on this one. This went public in May 2011 at $12. And you can kind of see right over here, it immediately pulled into that very typical post-IPO consolidation that many stocks, even Facebook, are doing. And that's not at all unusual. Just, again, it kind of makes me laugh with everybody kind of fixated on every downward move in Facebook. And, of course, there are a lot of reasons for that, as we know, but not atypical the way that particular stock is consolidating. But looking at Thurman Group Holdings, and by the way, this company makes thermal insulated pipes, heating equipment for construction. So right away, again, you can understand why you're not going to be necessarily seeing the financial media showing a whole lot of interest in a name like this one. This would have been kind of a hard stock to hold. If you kind of look at it there on a weekly chart, this is one of these names that I've been talking about. I mentioned earlier, you see it rally to a new high, then it pulls back, then it kind of trends along sideways. Here, back here, let's see, this was in the early part. Okay, so this was in Q1 2012, back when you had several weeks in a row here of upside trade. Not surprising, Q1, that's kind of what I was talking about a moment ago, that rising tide lifts all boats theory. So you had a nice run up here where you actually could have bought the stock at new highs, and then it pulled back a bit. Actually, what I want to do here is take a look at this one on a daily just to see at what point that this one was undercutting. Yeah, this is a very good example of a stock that when it did pull back, undercutting that 5-day exponential moving average. That's been a pretty reliable indicator all the way along this run that would have been a good place to enter or exit this particular stock. So this had a move up earlier in the session. Looks like it reversed lower. This has some factors that make it a good stock to watch. I just don't really particularly like some of the volatility. Let me see this. Actually, yeah, okay. Not the beta is only 0.99, so that's not really so bad. But nonetheless, you do see that just there are some pretty wide intraday price swings, and even on a weekly basis, you can see that this one would have been fairly difficult to hold. So just continuing to watch this. Who knows, maybe the character of trading will settle down at some point. That's not unusual. Sometimes there's some kind of announcement, maybe an acquisition or some kind of deal the company makes, and you do see a big spike, and then trading settles down based on that as the company attracts a greater number of institutional investors. So not unheard of for that to happen. So let me go back very quickly here. Stock I've talked about a number of times, and I talked about it the other day, I believe, because I made that Beverly Hillbillies joke. Ellie Mae, E-L-L-I is the ticker on this one. So this is interesting because it's kind of part of two trends that are showing some strength right now. First of all, financial software makers of not only mostly professional platforms. So some of these, not necessarily something, when I say financial software, not something like Intuit, but more the kind of financial software that institutions would purchase and be using. And Ellie Mae is an electronic mortgage originator, and it's used by the lending business, by brokers and so forth. So you see there on a weekly chart just some fantastic upside trade recently. And this is a small one, market cap of $493 million, moves about 360,000 shares a day. I want to come back and we'll talk about a couple more financial names when we get back right after these messages. And we still have time for some calls, 877-927-6648. I'm Kate Stalter, bringing you today's Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back. I'm Kate Stalter. Last segment of today's edition of the Small Cap Roundup. So I left the chart of Ellie Mae on there. Just wanted to kind of finish up with this, the mortgage originator. So this company is due to report earnings, expected to. It hasn't confirmed yet, I don't think. Sometime around August 2nd. So that could be some kind of catalyst, as we well know, for a big move, one direction or another, of course. We are in earnings season. Alcoa kicking things off for us there. So be interesting to see how much of an effect that has overall this year. Obviously, it does have a big effect in individual stocks. So always something to be aware of. So Ellie Mae right here from the, it's more of a maybe computer, it's more of a software, kind of enterprise software, but also don't be fooled is also a housing-related play, very much so. I guess if there were a stock with the ticker JED, maybe that would be an oil exploration play, perhaps. not so much production, but oil exploration, I suppose. Okay, let me move on here. I want to show you a couple others I was looking at. This is one you all know. I did mention that I was going to show you a small cap name that is well known and not necessarily loved, but known. FICO, F-I-C-O. And this is Fair Isaac, the FICO score. So this is making, let's see, this is forming a pretty nice consolidation there. I was kind of watching this chart. I was a little bit surprised to learn this is a small cap, market cap of $1.5 billion. A little bit light on the liquidity there, 274,000 shares a day on average. Kind of liking this consolidation. I'd like to see a little more volume in this particular name. Not bad earnings estimates on this one. It's always surprising to me for some reason. I don't know why it should be, but just when there's a well-known name that is a smaller company than you think. All right, we have time. We're going to squeeze in one call here. I'm going to put the ticker up here on the screen. Marvell, is that the one you're calling about here, Nick? MRVL?
Yes, I do. How are you?
I'm well. We've talked before, haven't we?
Yes, we did.
Great. Well, thanks for calling in. Okay, so let's take a look at this one. Yeah, I know this one well. We all do, from the chip sector, right. Marvell Technology, and really this one's cranking out some new lows here. What are you looking at in this one, Nick? We're pretty short on time. Only have a few seconds.
Right. No, just wanted to know what's your feel about when this technology sector massacre is about to meet go down.
You know, that's great. I love that. You know what? I'm not going to make a prediction. I'm just going to watch it. I'm kind of looking at where this is. Let's talk about, I mentioned the 5-day exponential moving average. This is about 1.5% below that 5-day line right now. So I wouldn't touch it yet. And let's see here. I've also, we're seeing the 5-day line below the 15-day line, and well below the 50-day. So you see what I'm saying? You want to see these shorter-term moving averages trend, turn around and move higher, and then wait for the stock itself. After you see some of these moving average crossovers, then wait till you see the stock cross above that 5-day line. That would give you a better indicator of strength, Nick. That's what I would be looking for in this particular one at this juncture. But right now, the technical signs just don't look good yet on this. Hey, sorry we can't talk longer, but thank you for calling in. Great question. Interesting stock. And thank you, everybody, for listening today. Check out TFNN.com to get your trial subscription to Low Price Leaders, the newsletter we launched a few months back. I'm Kate Stalter. I will be with you again on Thursday for the next edition of the Small Cap Roundup.